Everyone, welcome to New Views Tuesday live class. My name is Cora Matzik. I'm the Business Development Manager for the sales team, and today we're going to be discussing strategies for real estate investing. So I'm really excited to be able to talk about this because it is a common question that we get, and it's something that I'm ready to speak on. So let's get into it. If you are joining us online, don't worry, we'll go through the presentation. We will allot time to be able to answer any questions that you might have regarding this topic. And if we don't get to your question, we will also reach out to you. So don't worry about that. So just a quick disclaimer. I am not an attorney. I am not a CPA. Everyone has their own unique financial situations. Ensure that you're going to the appropriate party who is aware of your financial situation so that they can go ahead and advise you accordingly. We are just custodians, meaning that we just hold your funds. You direct those funds. So as always, let's go ahead and get into discuss what is a self-directed IRA. So an IRA in which the IRA owner directs all investment decisions, but self-direction is just a marketing term and it's not a type of IRA. So when you do have your funds in a self-directed account, you can pick and choose on where you would like those funds directed. So just a marketing term. You can have a Roth, you can have a traditional. What are some of the benefits of self-direction? So three of the tops that I can list: diversification, being able to have your funds in a diversified asset class is really beneficial to you because you can have that opportunity to maximize each one. Tax savings. Being able to invest in a tax-free or tax-deferred environment ultimately gives you the maximum opportunity to grow your wealth for retirement. And invest in what you know best. I say this all the time. I am not familiar with stocks and bonds. If you are, that's great for you. But why would I want my money to be directed in stocks or bonds? I have no idea how the market works. I feel as if my money is at the mercy of the market, whether I really know stocks or bonds or not. But you know, I can gauge real estate a little bit better. I have more experience than I would with stocks or bonds. So that's investing in what you know best, investing in what you're comfortable with. So the realtor solution. So excuse me, contribution limits, what we're looking at as far as, you know, Roth or traditional. So these are some of your employee max contributions that you would be able to obtain. So over the age of 50, combined total of 66,000. Under the age of 50, your benefits. So allows for after-tax employer contributions, allows employer contributions to be converted to Roth, much larger contributions as well too. So these are going to be for the checkbook, or it allows you for checkbook control. These are your solo options. So in order to qualify for a solo plan, you must meet two qualifying factors. So those qualifying factors are going to be, are you self-employed? Okay. And then also, do you have any W-2 employees? If you do not, you then would qualify for the solo. So no W-2 employees, and are you self-employed? Those are the two qualifying factors that would allow you to be able to qualify for the solo. We get this question a lot, you know, what can I invest in? And I always like to say the IRS allows you to invest in anything that the IRS doesn't prohibit. And fortunately for us, the IRS prohibits only very few transactions. So you can invest in private entities. So an example of that would be, you know, a limited partnership, a joint venture, LLCs, trusts, syndications. You can private lend. You can private lend, you know, secured or both or unsecured notes. And then, of course, real estate. So this is the list for some real estate that you commonly hear about, you know, rentals, foreclosures, Airbnbs, tax liens, fix and flips. We'll go in a little bit more in depth in the real estate side, but again, very, very few things that the IRS prohibits that you can invest in. So what are the real estate options? So again, a little bit more in depth. So if you are, you could invest in all of these using the tax benefits of a solo, if you do qualify for that. So again, you can still invest in, utilizing your investments with your Roth or traditional, but if you do have that solo, you can also as well too. Any of the accounts that New View offers, you can invest with. You can invest in alternative assets with. So what is a single multifamily? So single or multifamily resident rentals. So why would you want to utilize your funds in investing in a single multifamily home? Well, so cash flow. You're getting the rent back. So a reminder here, nothing is actually coming out or going into your IRA. It's just the flow through of it. So when you're getting that rent from those renters, they're addressing it to your IRA. So in turn, it's growing your IRA. So long-term appreciation, passive compared to other real estate investment types. So how do you do it? You locate where you would like to go. So RIAs are really good Facebook groups, wholesalers. Evaluate, what the cost would be to purchase. Maybe you need to fix a few things in that property, and then what you think you might your return. There are also so many different groups or professionals that would be able to help you gauge this a little bit better. Of course, I always recommend advising your CPA. There's real estate attorneys, so on and so forth, advisors. Those would be your best people to get that information. And then act. Make an offer. So something to consider. So here's our handy activity meter. These are some things that you should consider. Location. Did you negotiate the best possible price? Will you be able to keep the property rented? And do you plan on using any finances? So just keep in mind, prohibited transaction, disqualified parties, UDFI tax. So this is unrelated debt finance income. If you plan to use any bank financing to help your IRA, to purchase an investment property, ask your tax professional about how to prepare your IRA for UDFI tax, okay? So short-term rentals, so single or multifamily residence purchased for the purpose of listing as a short-term rental, or platforms such as, you hear all the time, Airbnbs, right? So, again, here's the why. Your cash flow, your long-term appreciation, much higher income potential compared to medium to long-term rentals. So same theme here as far as the how behind it. Finding a property, purchasing the property, preparing it for rentals, listing it as available on Airbnb, manage bookings, manage upkeep. So something to consider here. Same things to consider. Notes, though, is what you're going to want to kind of look at. So not only are we looking at the UDFI taxes, but UBIT. So make sure that you are, again, reaching out with your tax professional to assist you with that. Fix and flips, same thing. The why behind it, it's a large spread between the sale price and the purchase price after repairs. Short-term deals, ability to redeploy capital. Syndication. So if you're not familiar with what syndications are, it's investing into a business partnership entity who then invest in a variety of assets, usually real estate related. So we actually do have our own syndication division. They specifically only oversee syndication. So if you are interested in syndications, we do have our own division that can assist you and guide you on what that might look like. So why? Again, cash flow appreciation, very passive. The investor does little more than fund their portion of the deal. So you are funding that deal and they take the rest. So how do you do it? So networking. Notice syndications are private deals, thus requiring knowing someone or knowing where to look. So RIAs, podcasts, networking events. These are how you would find those syndicators. Do your due diligence, get as much information as you can before you ultimately dive in. But the more knowledge that you have on syndications, the better. Things to consider: is investing with this entity or limited to accredited or sophisticated investors? So if you're just getting into the game, will you be able to invest in that syndication? Will the investment trigger UBIT or UDFI? What is your exit plan? Could you liquidate if necessary? So keep those things to consider. Another option that you can utilize your IRA in is going to be unimproved land. And this is the purchase of land with the goal of selling for a profit to other investors or developers. So why? Speculation, long-term appreciation, low barrier to entry, and they're not making any more of it. So how do you do it? You find a property, purchase the property, and you sell it. So same things to consider as far as location. Here's a bonus thing to consider: areas that are likely to be developed or have population growth. Did you negotiate the best household price and buy and hold investment? Are there plans for development? But also keep in mind zoning laws. So joint ventures. So joint ventures within IRAs allow the opportunity to invest with other individuals and with other IRAs. So use your resources, your expertise, and finances to collaborate and work together on a specific venture towards a certain goal. Use your skills and resources, collaborative work, potential to gain profit. So how do you do it? Rehabbing a home, homes to make a profit, income producing properties to create passive cash flow, buy and resell properties for profit. So one thing to consider too, if your IRA does not have enough funds, you could partner up with other people who are looking to achieve the same goal. So going in on a joint venture, so your IRA can contribute, their IRA can contribute, and then you guys would be able to start investing in alternative assets. So strategizing for diversifying your portfolio. So you're going to look at the geographic areas, your property type, and then the risk profile. What are the restrictions? So earlier I mentioned that the IRS prohibits very few transactions, and a way to break this down is there's people restrictions, transaction restrictions, and investment restrictions. People restrictions would be this. So I would, take a look at this graph here, screenshot it, have it for your records, but this is going to be the way that you can gauge on, is this going to be a disqualified party that I could utilize my IRA with? So any one of your, I always like to keep a rule of thumb, any of my immediate family members, spouse, something to consider. Those people are the ones that you're going to be, having that area of knowledge there, who you can and can't invest with your IRA. Transaction restrictions. You can't buy, sell, trade, loan, or extended services, direct or indirect, with these people. Another one to consider here that you're going to want to take a look at and write down: investment restrictions. So these two investment restrictions here are prohibited. You cannot invest in life insurance. You cannot invest in collectibles. So your IRA is meant to benefit you while you're alive and you're retired, not after your life. So knowing all of these knowledge, all of these aspects of what you can do with your self-directed IRA, the common question that leads to is, how can this help me do more deals? So using your IRA to build your business, so your buying power. A lot of people are limited to the amount or the deal that they want to get into because they don't have enough funding. You could partner up with your IRA and invest in that property that you have had your eye on. You could partner up with other IRAs and start that and build your portfolio. It's quick moving, immediate availability, financing options for deals. 20% of 2021 sales in South Florida were actually by investors. So lowering prices means greater investor activity. So these are your next steps. If you want to know more information and you want to set up your account and actually start, and you realize how easy it is and how easily accessible it is for you to be able to start getting into the investment world and investing in alternative assets with your IRA, it's as simple as scanning this QR code, talking to one of the IRA specialists to find the best account for you and your goals, filling out an application, and transfer your funds or make a contribution. Make your first investment and start self-directing. Here at Newbie Trust, we are educators by trade. We love to educate on the alternative investment, what you can and can't do with your IRA. And this is a way to stay in the know. We have different live classes all the time on different topics. Maybe you might have a suggestion of a topic that you haven't quite yet seen. You can scan this QR code, stay in the know. This is a link to all of our social platforms. But also, I would encourage you as well to check out our website, newviewtrust.com. On the educational resources tab, you'll find a link to our podcast, to our live classes, and see those schedules. Browse around our website. Take a look at the different account options that we have. As I mentioned, we have the traditional, the Roth, the solos. We also offer specialty accounts as well too, that a lot of people don't realize that you can utilize alongside your retirement funds, like your Roth or traditional. So HSA accounts, educational savings accounts. So really, really good things to look at. We have all of that information available to you. With that being said, that wraps up my presentation aspect of it. So I want to know from you, what kind of questions do you have for me that I'd love to be able to answer for you?
There are a couple from online. The first one is, how do you assess the potential of a specific real estate market before deciding to invest in it?
That is a really good question. It is a common question that we hear all the time. There are different tools that you can easily access online to be able to help gauge the market. There's professionals out there that this is all they do is look at the return on this area, the geographic location. So I would encourage you to do some research online and seek a professional. You can find their area of expertise and they can assist and guide you. Self-direction can maybe feel overwhelming, but it doesn't need to be overwhelming. Any other questions?
We have one more. It is from Tammy. What are some key principles or fundamental strategies that beginners should be aware of when entering the real estate investment market?
One thing that I hear of often of people mentioning when they first started to get into investing in real estate is having the knowledge of what they're actually getting into beforehand. You might think you found a property that's a steal, it's a deal, and then you find that the cost to repair it or get it up and running for a short-term rental is more than what you anticipated. Make sure that your IRA, if you are utilizing your IRA, make sure that you're having that funds for worst case scenario, for those repairs, and because your IRA would ultimately be the one funding those repairs if need be, because you cannot go in and change the light bulb or do those repairs yourself. So that is something to consider. Again, there are so many useful groups that can help you out. The local RIAs that you might be a part of in your area. We're located in Florida. We're a part of many of the RIAs. So those groups are specifically there to be able to assist people and members of their community to be able to become more savvy and knowledgeable about real estate and investment. So I would encourage you to check those out.
And those are all the questions from online.
Great. Well, thank you so much for tuning in. We look forward to seeing you next week on our next topic. Until then,